what is Audi Assured and what does it bring that's new to the market?
So Audi Assured is a financial product that we offer.
Okay.
And I think the explanation is in the name.
Assured.
Assured. Because the purpose of the product, first and foremost, is to give customers the assurance that they do not have any risk associated with their purchase.
Hello and welcome to the Financial Bunny TV. My name is Nicolette Mashile. I am also known as your Financial Bunny. Today we're going to be talking about the smart way to buy a car. What is Audi Assured and how does the guaranteed future value actually work? Now before we get into this conversation, please do remember that none of our videos or interviews constitute as financial advice. If you are, however, looking for financial advice, please do speak to somebody who is certified and registered with the FSCA. My guest today is Asif Hoosen, who heads up retail and planning at Audi South Africa. Asif, welcome to the show.
Thank you for having me.
And I think I just want to give like a little synopsis before we get into our conversation, because I want to start it off where we give a bigger picture of what is the actual status or sentiment of car buying in South Africa. And maybe if I can start off here by saying, if you just spend some time and do a deep dive on social media, you know, some of the sentiments that you're getting is South African cars are expensive, or, you know, financing is difficult to secure. Then you sometimes also have people saying, yeah, but it's easy to secure car financing versus house financing. So there's a lot of mixed bag of conversation. But one that often comes up is, of course, depreciation of cars.
Yes.
It's the idea that I want to change my car in the next, you know, I always say, when you buy a brand new car, within 6 months, you already want a new one, right? I mean, that's just, I hope it's everybody, and it's not
It's
just
just
me.
being human.
Absolutely,
It's just
right?
being human,
Absolutely. Yeah. So what then would be the best way for you to buy a car so that you can almost satisfy those human needs that you've got, obviously responsibly,
Correct.
but also deal with the issue of cars being a depreciating asset?
Yes.
And talking about all of that, what we are all accustomed to is the installment sale, which is what many of us know. You go to a dealership, you pick a car, you go to a bank, they finance it, you pay every single month. And hopefully you don't have a long-term period for you to be able to settle it. And by the time you finish, you still have a car that's worth some sort of value.
Yes.
So maybe let's talk about that. What have been your sentiments around your family braais and kitchen tables on car buying?
So car financing is an interesting topic because financing cars is no different to financing anything else, with the caveat that the vehicle is valued as something at the end of that period.
Yes.
And that's where I think it gets a little bit confusing, a bit tricky at times, because there's these things called a residual or a balloon payment, I think is the most common term.
Yes.
And you've got to then match that balloon payment to the value of the car in the market. And the thing that's difficult to predict is in 6 years or 7 years or 8 years' time, what will the value of that car be in the market? That's where your point on depreciation comes in, because depreciation is something that everybody relates to car purchases.
Yes.
And rightfully so, because it is an asset that you use, so it does depreciate over time. But that depreciation is relative to the value that you would receive for that car in the market in the future.
Yes.
Now, the trouble with purchasing cars like we have in South Africa, it's a legacy of installment sales. And you would see over time, it's moved from 4 years to 5 years to 6 years.
Becoming longer and longer.
Right? So it's 72 months.
Yes.
Now there are contracts running into 7 years and 96 months as well. So what it does is it gives consumers an opportunity to lower the repayment because of the period.
Yes.
But what it's also doing is it's taking you to that end point where you become even more uncertain of what is the car going to be valued at?
Absolutely.
At that point in time.
Absolutely.
And generally these finance arrangements are with a 30% balloon, which means 30% of the value of the car is set aside and the customer is responsible for it at the end of term. Right? So I don't think many people get to the end of term because every 3 years, 4 years, consumers as we are, we become restless. We want something with the newest design, the newest technology.
Yes.
We want to get into something different.
Yes.
And that's just a normal human behavior.
And sometimes your life changes, you know, you get
And
kids,
your needs change as well.
Yes, absolutely.
Now, the thing with this legacy financing of installment sales is that if you take a car over 7 years for 6 or 7 years. But you would like to change that car after 3 or 4 years. Now, what has to happen is you've got to have equity in the car.
Yes.
So you've got to have paid off more than you owe.
Yes.
Which means you have some value in the car versus what the car is valued at that point in time.
Yes.
And that's what makes it tricky, because I think there's a term you may or may not have heard of called shortfalls.
Yes. Yes.
So that's when people try to end their contracts early.
Yes.
And then there's a shortfall between what they owe the bank versus what the car is valued at.
In the market, yes.
And then the customer's got to put in 20, 30, 40, 50, 100,000 rand to get out of that vehicle into the next vehicle.
Yes.
So the legacy of financing over installment sale is, in the past, I think it was okay, because the market wasn't, firstly, as proliferated as it is now. There were not so many factors affecting the used car market in the past. Now you've got so many models in the market that the used car market moves up and down all the time based on supply, demand, the push from a new car sales perspective on discounts. Because any discounts up front affects the residual value of the car later on.
Yes, absolutely.
So consumers, different to when you're getting credit card access or home loan, is you don't have to worry about the disposal necessarily relative to the market value and what is attached to it.
True.
So the way to finance is now evolving. We are seeing it more in our space, in what we classify as the premium market, which is made up of 10 premium brands relative to the, let's say, more volume selling cars.
Yes.
And because of the access to the premium market, where a premium car in South Africa is, an average price of it now is probably in the region of about 1.2 or 1.3 million rand, that access to vehicles of that price band, we have to have innovative financial products to allow consumers access. So it's a little bit different lower down. Maybe if it's a 300,000 rand car or 400,000 rand car, the installment sale is still very
much
popular.
The preferred one,
And much preferred because it's necessary to some extent as well.
Yes.
And because you're dealing with such big volumes, it's easier to predict residual values on vehicles that are established in the market. So vehicles that have been around a long time, far easier to predict the residual values, and consumers become more comfortable because they've had positive experiences. Now I've taken ownership of my car, I've sold it, I've generated a little bit of income, I'm using it as a deposit on another car.
Okay.
But where it becomes tricky is when you have new entrants in the market.
Yes, yes.
Harder to predict. You're moving with a lot more uncertainty. Even though you may want ownership, you're going to kind of realize that it's actually not really ownership because you're signing up for 6 years, but you want to change your car at 3 years.
3 years, yes.
So you don't really own the car. What you want is usage of the car over that period of time. And like you said just now, your lifestyle needs change.
Yeah.
So it's not, in my opinion, not if you can gain access to innovative financial products, it's not too wise to go for the longer term installment sales.
All right, you've said quite a lot, and I think it's a great place for us to be able to start the conversation. But perhaps let me take you a couple of steps back. When we talk about depreciation, just for the benefit of whoever is watching now, are there certain factors about how you drive, how you keep the car, how much mileage you're putting on the car that will hasten depreciation?
Definitely.
Okay.
The condition of the car, the mileage on the car plays a key role. The specification of the car plays a key role. So I'll give you an example. Vehicles generally in the used car market, a vehicle with a sunroof, in the premium market space in which Audi competes, a vehicle without a sunroof will attract a lower value than a vehicle with a sunroof. Because in premium cars, sunroofs are seen to be wanted by just about every consumer.
Yes.
So what happens is it becomes a point of differentiation in the used car market, where those cars attract higher values and these cars without sunroofs attract lower values.
Okay.
Likewise, if you've got a 2-year-old car that has 40,000 kilometers on it, where 20,000 kilometers a year is acceptable, versus a car that has 2 years with 80,000 kilometers on it, that car will attract a lower value because of the higher usage relative to the car that has the lower mileage. Because the car with the high mileage is getting to the end of its maintenance plan.
Yes.
Whereas the car with the lower mileage is
still
still got 60,000 kilometers left of its maintenance plan. So that affects the values of the car in the used car market,
Yes.
which inadvertently is classified as depreciation.
Yes.
Because of the value. So your driving style, the condition that you keep your car in, whether it's well taken care of,
Yeah.
whether the used car dealer has to do a lot of reconditioning work on the car, then of course they would pay you less, which in your mind as a consumer would be this car is depreciated so much.
Yeah.
So depreciation is always, it's a little bit variable at times depending on condition of the car, driver circumstances, supply, demand of the car at that point in time as well.
Yeah.
Because if there's an oversupply of the car in the
Then
market, at that point in time,
yeah,
it'll drive the
consumers get to
values
choose.
down.
Yeah.
So there's many things that affect it. I mean, there's no doubt that a vehicle depreciates.
Absolutely.
Because you're using it on a daily basis, and the maintenance plan is wearing out, the warranty is wearing out.
Yes.
And obviously as vehicles age,
There's wear and tear.
there's wear and tear on it, and there's a higher risk of greater maintenance that's needed
Absolutely.
on the vehicle. So depreciation is always this thing that it moves around based on customer profile, based on the vehicle as well, based on supply and demand, based on the state of the used car market, which is why it's always so difficult to predict what's going to happen to your car at the end of term.
And with that in mind, and I'm just going to bring this conversation closer, ownership of cars then kind of falls away. Like it doesn't feel that there's a value in wanting to own a car.
I think that's, broadly speaking, yes.
Yeah.
There are some cars that customers want to own.
Yes.
Of course, it becomes more niche.
Yes.
So take the Audi R8 as an example. That's a car that customers would want to own.
You want to own that car, yes.
You want to own it.
Yeah.
Also because it's discontinued now, so it's going to appreciate in value.
Absolutely.
But those are niches in the market.
Yes.
Broadly speaking, ownership, the concept of ownership, is an interesting one because, as we just discussed a little earlier, do you really own your car? Because you're signing up for it for 6 years, but you're restless. You said 6 months, but you're restless
6 months, I'm like,
around 3 years.
Yeah.
You're like, I've just seen this new car and I want to get into it.
Yeah.
So it's not, I think the concept of ownership is maybe a little bit misinterpreted.
Yes.
When it comes to vehicles.
Yes.
Houses is a different story. Property is a different story. But vehicles, the concept of ownership. And it is still prevalent in the South African market. All you got to do is drive in traffic at any time in Johannesburg, and you'll see it's full of cars.
Yeah.
But there's usually just an individual in the car.
Yes.
Right, so everybody has
their own car.
Their
Driving
own
their
car,
own car.
and there isn't any concept of carpooling
Yes.
or anything like that. So the concept of ownership, I think, certainly in our space, in the premium market space, we are moving away from ownership to more of usability.
Usability. Oh, I like that.
Because that allows customers not to get access to a premium vehicle, use it as it changes, evolves,
Get
new
into the
designs
next
come in,
one.
new technologies come out, lifestyle changes.
Yeah.
You get into the next one, and you've got a high degree of certainty in moving from car to car.
And I guess maybe the conversation around ownership is also obviously from our history as South Africans, being part of the have-nots. But I think what's nice about your brand like Audi is that you're also evolving with the market. You know what I mean? Yes. At some point in South Africa, ownership was quite big, even for the premium buyer. But now you guys have almost realized that there is an evolving that's happening with the lifestyle and the way that they want to be able to consume cars, that they do want to have that change in 3 or 4 years.
Definitely, because we have to. We can't stand still with it.
Absolutely.
Because we're not going to meet this changing consumer need. And that means we will fall behind. But consumers today, outside of cars, have access to so many different things.
Options.
There's so many different experiences, so many things that you see, which on a continuous basis, consumers themselves are evolving.
Yes.
Right? So this want and desire for something new, something different, the ability to stand out, that's just growing. So if we stuck in this cycle of, no, we can only finance cars a certain way, then we're definitely going to fall behind.
Yeah.
And I think failing the consumer is probably the right way to put it.
Absolutely. So let's talk about Audi Assured. What exactly is it? Because we hear about guaranteed future value. We hear about different. So what is Audi Assured and what does it bring that's new to the market?
So Audi Assured is a financial product that we offer.
Okay.
And I think the explanation is in the name.
Assured.
Assured. Because the purpose of the product, first and foremost, is to give customers the assurance that they do not have any risk associated with their purchase.
Okay.
So the basis of that is that we attach a guaranteed future value, which is a buyback.
Yes.
That we stand behind. So it's a guaranteed future value to the customer, and the customer doesn't have to worry about that guaranteed future value because the responsibility for that vehicle sits with us.
What's the trade-off?
So, well, there isn't really a trade-off, and I know you're going to say that
yes,
it sounds a little bit too convenient.
Yes.
But how it works is, so if you take our car at the start, all of our cars have a 5-year, 100,000 kilometer maintenance plan attached to it. So firstly, there's maintenance-free motoring for 5 years, 100,000 kilometers. And our maintenance plans are very comprehensive. It's usually tires and things like that consumers are liable for, but everything else is pretty much taken care of. Then attached to that is this guaranteed future value at the end of the term. That a customer does not have to be concerned about. But the benefit of it is when this vehicle is being financed, the guaranteed future value portion of it is removed from the finance calculation, and it's the remainder of it that's financed, to which interest is attached, etc. So in essence, what happens at the end of it all is that the customer ends up paying for usage of that vehicle, and if you add up all the installments over that period of time, and you compare that to the recommended retail price of the car, you would find that sits somewhere around 60% of the recommended retail price of the car. So a customer could use that vehicle for 4 years, have zero risk related to it, and have maintenance-free motoring as well, but at the end, only pay 60% of the value of the car for the usage. The balance of the rest of it is up to us. We take the risk on it in getting the vehicle back and then selling it on to the next customer.
Okay, so let's paint pictures. I think I work better in pictures. So I've come in. There's a car that I want. What's retailing at around about $1 million that I can get into?
Okay, so we could get you into a high-end, say A5.
High-end A5.
You could get to an A5.
Okay, let's push me to like the RSs. How much? What am I dealing with? What type of prices?
Okay, so you're dealing with about 1.5 million.
Perfect. But no, don't worry. I've got it. So 1.5. I come in. I say to you guys, I want this on the Audi Assured value proposition, right? You guys guarantee me a value of this RS. In 5 years' time. Let's say you guarantee the value it being 800,000, just for argument's sake, right? In the 5 years, what are my terms and conditions? What am I allowed to do? What am I not allowed to do?
So firstly, what we would do is it would be a 4-year contract generally.
Okay, 4 years, yes.
And the reason it's 4 years is because we find that in the used car market, that vehicles after a 4-year period get to a sweet spot in the market, if I can call it that. Where it then becomes a lot easier to sell that vehicle on as a pre-owned vehicle to the next customer. And there's inherent value in the car.
And the next customer still wants it. It doesn't feel like an old car to them.
You can do it at 3 years, you can do it at 2 years. Generally, I think on the buybacks, you find them at about 4 years. So certainly with us,
it's not recommendable to do post the 4 years. I mean, you can still do it.
You can. The challenge with that is 4 years, 20,000 kilometers a year takes you to 80,000.
I see.
And the maintenance plan is up to 100,000 or 5 years. So that car comes back and it still has 1 year or 20,000 kilometers left.
Clever. See, you guys have done the math.
So and we'll get to how that can actually be used better. But in this contract, so what it is that you sign up for the vehicle. You decide on what mileage you'd like to do per year.
Okay.
Our offers are structured around 20,000 kilometers a year.
So I can say I'm going to do 15.
You could do 15.
Okay.
Which means that the residual value would show a little bit of an improvement.
Yes.
Because the car is a better quality car and it comes back at the end of term.
If I stick to the 15.
If you stick to the 15.
Okay, perfect.
So On the basis of that arrangement, you would sign up that contract. The car would have to be maintained by an Audi dealer because the freeway plan is in place. And it's Audi dealers who would maintain the car for you. So the service history or the repair history, maintenance history is important.
Okay.
Because you should not deviate from that and take the vehicle elsewhere.
Okay.
To be repaired or do things that will jeopardize your warranties or your freeway plan.
What could jeopardize my warranty?
As an example, if you take an RS3, which you're interested in now, but you go to a tuning company and you ask them to put a chip into the car to increase
or to drop
power,
it.
To increase the power output or to drop the car, those kinds of things would compromise you because it would make your warranties and your maintenance plan null and void.
Yes, okay.
And that will affect it. So you can't do that.
Yes.
You've got a mileage limitation, X amount of kilometers per year. And of course, there's the installment that you've got to keep up, but that's pretty much it.
Okay.
And over the period of the contract, fair wear and tear is acceptable, but the car's got to be in good condition.
But not bashing and bumper.
Because generally speaking,
and I'm making it into
the car has to be insured.
Yes,
and if anything happens, it's got to be repaired and back up to standard by an Audi approved motor body repairer, etc. Yeah.
All right. So then I'm 4 years in.
Yes.
Or let's say 3. You know, in 3 years I'm probably restless already. So I come to you guys and I say, or rather let's say 4 years. So I've come to the end of my contract.
Yes.
What are my options after that?
So at the end of the contract, you've got 3 choices.
Okay.
Basically, you can choose to retain the car and say, listen, I'm enjoying the car.
Yes.
I really like it. I want to purchase it for whatever the value of the car is now.
So the amount we agreed on at the beginning of the contract.
The guaranteed future value amount. So I can purchase it and I'm going to take the car away from you guys. I'm going to take full ownership of the car.
Okay.
Alternatively, I want to purchase it, but I don't have access to the funds right now, so I would like to refinance it, which is a possibility.
Okay.
Or I would like to
return it to you.
So and the return could be in one of 2 ways. I could give it back to you and say, thanks very much. I don't need a car right now, or I've got a car in the household. I don't need to buy another vehicle. I'm simply giving it back to you.
And I'm done.
And you're done. And you walk away.
And in the 4 years, I would have paid for usability.
You would have paid for the usability.
Okay, got you.
Or you can use it to trade in against another
car.
Yes.
Oh, that's interesting.
So from a consumer point of view, there really isn't any risk related to it. Of course, you've got to make sure you take care of the vehicle because it is the bank's asset. And you've got to make sure you adhere to the kilometers, etc. In terms of the
Can I tell you what you've just done, Asif, that is going to kill us? You've just given every single person that loves saying, it's not your car, it's the bank's car. You've given them like that stamp of validation. They're going to use this to say, even the head of retail and planning at Audi said it's not your car. Well, I mean, in all essence, it actually really is. Okay, so here's a critique now, right? What would be the difference between the guaranteed future value that you are signing up for at the beginning of the contract versus a balloon payment or a residual payment?
So the residual payments are the single biggest difference is the residual payment is on the consumer.
Yes.
The consumer is liable for it.
Absolutely.
The guaranteed residual value on our side and the buyback, the future value, is on the side of the bank and the manufacturer.
So you guys position it as a buyback amount. So
yes.
It's buyback from you. We're buying back the car from you at this value.
Correct.
Provided that you have kept to the terms and conditions of your contract.
So we guarantee the future value of your car.
Yes.
And we buy that car back from you. So you are not exposed in any way to the risk related to it. So at the end of term, say that RS3 that we spoke about now, we said it's 50% of the value of the car, right? To simplify it. But when that car comes back to us, for whatever the reason is, it's worth 40% of its value.
Yes.
That 10% risk.
You guys take that.
It's on our side, not the customer side.
Got you.
So equally, if we're being open and transparent about it, say the car is worth 55% of its value, then we would then derive a benefit from it of that extra 5%. But that risk It's mainly, I would say most of the time, it's more of a risk and a reward for consumers. And that's why on the balloon side of things, at the end of term, a customer would be liable for the 30% or the 40% balloon.
Okay.
You could probably refinance that as well,
Yes,
I think.
yes, you can.
But then you're going to be refinancing
Oh, yeah, you're kicking the can down, basically.
forever because it's a 6-year contract and you're refinancing for another
next
3 years or 4 years, and you're going to have the car for 10 years. But the holding period, incidentally, across the industry, well, certainly what we can see from our banking partner, and this now includes not guaranteed buybacks, but everything. Customers are changing their cars, settling their cars around 50 months. So it's 48 to 50 months.
Okay.
Even though they're signing up contracts that go 6, 7, 8 years, they're coming back to the banks and saying, I want to get out of this car after 4 years.
Yes, because we've taught them, Asif. We've taught them that, you know, you'll save more on interest if you pay quickly, you know. Let's talk about that, the installment now. What makes up the installment? If I'm buying this car under the Audi Assured value proposition, my installment compared to what it would be in an installment sale, is it slightly higher, slightly lower? Am I having to accommodate the depreciation costs? How does it look?
So that's a very interesting question, because if you take a car and you say, let's put this on a guaranteed buyback program, and let's put the same car on a 72-month installment sale contract.
Yes.
In most instances, the installment sale will be cheaper.
Of course.
Because of the longer period.
Yes, because we've stretched the term.
Yeah, so if a guaranteed buyback is on 36 months or 48 months, obviously a 72 or 84 month is going to make your installment cheaper.
Yes.
Right? So what generally we do is we look at it and we look at the two together and we say, we would like to get customers to participate in a guaranteed buyback program. So we would look at how we could incentivize the financial offer to be cheaper than a 72-month contract.
Okay.
It doesn't have to be dramatically cheaper.
Yes.
Because there are inherent benefits of buying a guaranteed future value product. Risk, etc., like we've just spoken about.
The transfer of the risk.
But from a transactional point of view, if it is cheaper, it makes it that much easier for a consumer to say, okay, I'm in.
Yes.
I'd like to go this route because I know what I'm getting into and I don't have to worry about what's going to happen in 4 years' time. So how the offer would work on the guaranteed future value product would be that if it's a 60% guaranteed future value, the 40% is what the customer would have to pay off over the 4 years with interest, etc., attached to it. And that's all the customer would be liable for. So depreciation is also, in a guaranteed future value space, is not really too much of an issue.
Yeah.
Because the impact of depreciation is not your concern anymore.
Absolutely. It's almost taken away from you.
It's taken away from you. So you don't have to worry about whether the car is going to depreciate quickly or slowly or what's going to happen at the end of term. So if the repayment suits you, and the conditions suit you, then you can jump into get access into a premium vehicle. And
maybe let's talk about, you know, this question and maybe just kind of go a little bit deeper into it, because often what I find is that South Africans will, and I mean, it might even be a global phenomenon. It doesn't necessarily have to be a South African thing. We focus on how much am I going to pay every month.
Yes.
And because of the installment sale, the nature of it, being able to stretch the loan term, it may just become very difficult and probably unsustainable for you guys to try and incentivize, you know, the 4-year versus a 9-year contract, you know, to buy a car. Is it because maybe there's a lack of understanding of the total cost of credit that we may need to educate a little bit more on?
I think there definitely is an awareness and education that needs to happen, so that consumers can understand and make informed decisions as to what they would like to do. Because the installment might be a little bit higher on a guaranteed future value product. But in the longer term, it's more worthwhile.
Yes, absolutely.
So I'll give you an example of an offer we've got in the market right now.
Okay.
It's just our open house. We've got our big sales event that just launched on Monday. It's called Open House.
Oh, we're in a sale?
So we're in a sale.
Oh, okay.
Yeah.
All right.
So that's all I should have led with that.
You should have, that's where you should have started.
So we've got the open house sales event that's running. It's running until the end of April.
Okay.
And the big thing here is, of course, you come in, you test drive a car, and you get entered into a draw to win an exclusive Audi Formula One experience.
Oh, wow.
Because we've entered Formula One for the first time.
Oh, well done.
But over the open house period, we've also got special offers that we've unlocked for customers.
Okay.
So one of these offers is getting an Audi Q2
okay.
for $8,999 a month, and it's on a 36-month contract with a guaranteed future value.
Okay.
So that vehicle, let's use round numbers, say is valued, the recommended retail price right now is say 800,000. Right now, if you take 9,000 Rand over a 3-year period, we're speaking about 108,000 Rand a year.
Okay.
So 324,000 Rand over a 3-year period.
Yes.
Right? 324,000 relative to an 800,000 Rand car.
And you're committed to this 800,000, fully on.
Because that's the price
that's
of the
price.
car.
Yes.
Right? So the customer is going to pay 324,000 Rand over the term of 3 years.
Yes.
Where the car is valued at 800,000.
Yes.
So you're paying a fraction of the cost of the car over that period of time with no risk to you attached to it. And at the end of term, you've got those choices where you could just hand the car back or choose to get into another car. Because if your situation has improved and you now can afford a 10,999 per month car.
Yes, you can jump into the next car.
You simply come back, hand the car back and say, thanks very much. I'd like to buy the new Q5 or the new Q3.
The light just went on.
So when you talk about total cost of ownership, of course, I'm not trying to oversimplify it because there is insurance, there's all that stuff attached to it, right? Which would also be relevant if you do an installment sale.
Yes.
So that you could almost take out of the equation.
Yes.
But when you look at it from that perspective and you do the sums, then you suddenly realize that this thing about usage makes complete sense because you're using the car, but you're only paying a portion of the cost.
And so a light bulb just went off because I'm just thinking also about the market, right? The type of market that we currently have. And I'll speak about the market that I'm in. We're in the gig economy. You might have a contract for the next 3 years and then boom, nothing, right?
Yes.
I think being able to get out of a deal in 3 years and relaxing and saying, okay, I need to catch my breath, I need to kind of recover in terms of career, and then moving on to the next career or moving on to the next job, and then it requires a car, being able to come back and say, I'm now ready again to get back into another 3-year contract.
Yes.
That is fantastic. Because think about it, I mean, how many people had to have, I mean, it's obviously a very complicated situation, but on the surface, how many people's cars got repossessed during COVID because they were out of work, right? And they still, just because you are out of work doesn't mean that the loan that you've got in an installment sale stops out of the blue. Yes, maybe they may give you a payment holiday, but it still carries on. Or if you get into an accident and now you need to still finish off that 6-7 year loan that you've got. So this is quite interesting because in 3 years' time, essentially you're saying to me, I have options to decide whether I want to keep the car, change the car, or give it back. And I want to say it in Zulu, koka umoya. Like just breathe, you know, and then come back when I do need a car. I'm also thinking about small businesses that, maybe not small businesses per se, but, you know, when people are in professional settings, like doctors, you know, lawyers, you know, they may need that break to be able to breathe and then come back into a car.
It allows you to not worry about your mobility needs from a planning perspective and allows you to plan with more certainty. Because that's the one thing you can plan with certainty. Right? There's most other things in life you can't predict the future. But with this Audi Assured product, you can, because as long as you are comfortable with that monthly installment, and you know that there's an end to it, there's a point in time where it will end, and you're not liable for anything that happens past that. Then you could use a car for 3 years and say, okay, at this point in time, I'm ready to maybe purchase a car and take ownership of a car. But you don't have to advance that decision if you're uncertain about where you might be in 3 years from now. if that makes any sense.
It does make a lot of sense. In your meetings, Asif, when you're sitting with your team and you guys are, whether it's your team, sales team, marketing team, dealership network, when you guys are talking about who is this product for, what is the profile of that person?
Well, I mean, we real about where we are positioned in the market, right? And if the average value of a premium car is 1.2 or 1.3 million rand, we're obviously not speaking to the mass market or the volume market. And we also know that the premium market is worth somewhere around 30 to 35,000 cars a year. And it's going to be that way into the foreseeable future.
Yes.
Because there's just too many models in the market. So we're speaking to a very
niche.
In terms.
You're speaking to Nicolette.
We're speaking to Nicolette,
Yes.
the Nicolettes of the premium market. But if you take the premium market as a percentage of the overall market, the overall market's 420,000 passenger cars. So we're sitting somewhere around 7% or 8%. So we are, in a sense, we've become quite niche. So this is, it's the customer profile that we generally are speaking to, people in, I think, entrepreneurs, people who have their own businesses. They are in corporate, but they're probably at middle, senior, upper level management, C-suite executives. We're speaking to individuals who have access to this type of product, but also who have access to the lifestyle related to it. So here we are not trying to get customers into an installment sale necessarily with the cheapest possible installment, just to get into an Audi brand. And then find that the consumer then suffers after a few years because you cannot keep up. And actually at the end of term, even though you love Audi now, you cannot jump into the next.
So you're almost forced to leave, and you want to keep us in the ecosystem.
Exactly.
Absolutely.
So that's the profile, broadly speaking, of who we are trying to attract. And it's people who I think who are more financially astute, a bit more savvy with their finances, who would see the benefit of something like that. Because even if you have the ability to purchase a vehicle cash, generally cash. When I say cash, it's in inverted commas because it's usually funded from a mortgage bond or share disposals or something like that, right? So it's not really cash. It's under the mattress.
It's not just cash, it just dropped. Unless you're from the I Blew It crew. The guys who get their money from RAF and Lotto.
But these types of consumers are more financially astute. They could see the benefit of using the cash that they have
somewhere else,
elsewhere, getting a return on it, and then using this product for their mobility needs. So this is the type of consumer we are speaking to. But it still takes a lot of education, awareness, many discussions, because this legacy of ownership
is what needs
always becomes topical, even in our dealership space. It's about, well, I don't own the car. And then you go into the discussion of, well,
you never actually
do you really own the car?
You never really do,
So that's the space we're in now, but we're gaining a lot more traction with Audi Assured.
Okay, so let me put you on the spot, because you've just you've just said something quite interesting, right? Financial content creators, financial professionals, those who do podcasts and speak on finance, love this. The best car you can ever drive is a fully paid up car. You're saying you could use that money somewhere else and get a better return versus what
It's the smarter thing to do. Because this conversation that we've been having, the word depreciation has come up so many times. And I think that's also at the forefront of many people's minds when they're purchasing a vehicle. But if you can have the ability to not worry about depreciation, still meet your motoring needs in an affordable way, why would you want to worry about that aspect of it?
And make sure you've got a good credit score. Because also comes into play.
Listen, you can pay up a car sooner and take ownership of it. In fact, in the financial world, it's a smart thing to do to advance your payments and reduce your interest costs, etc., etc. You can do that, but the question is, what is it that you're really wanting from your vehicle? Let's put ownership in inverted commas. What do you want from it? Do you want to take ownership of it and keep the car for 10 years? Or would you like to change your car every 3 years, like you do your iPhone?
Yes.
And your MacBook and everything
Yes.
else?
Yeah.
Because that's probably more where you would be leaning towards.
Yeah. And I guess also the profile of a premium buyer, that is who they are. You know what I mean? They're not really bogged down on ownership. And they've done the mathematics. You know, the numbers make more sense to pay for the usability because it actually makes not car ownership per se, but it makes car access a lot more affordable.
Definitely.
Yeah, if you look at it from that perspective.
Definitely. And this is about access.
Yes,
because
definitely
if you take that 800,000 rand car I spoke about earlier and you're only going to pay, say with all the admin charges and whatever, it ends up at 350 or 400 for simplicity's sake. It's 50% of the value of the car. Yes, you don't own the car. Yes, you're not using it forever. But then you're only paying 50% of the value of the car. And the rest of it you don't worry about. So that's where it's in our opinion anyway, it needs to move towards for consumers.
So someone's watching right now is screaming at their screen and saying, I've heard everything, I'm convinced, where do I get more information about Audi Assured?
So Audi Assured, you could go to our websites, of course, at audi.co.za, and that has a section on Audi Financial Services. It also shows you in a little bit more detail how Audi Assured works.
Okay.
Alternatively, and probably the better thing to do would be to visit one of our Audi
dealerships,
and inquire about Audi Assured and ask them to explain it to you. It's always useful if you're interested and you're doing it on a specific vehicle, to then compare the quotations and look at an installment sale, look at the Audi Assured offer, speak about the pros and cons. But I think the biggest thing about it is maybe to approach it with more of an open mind. And drop the baggage of ownership, installment sale.
Yeah.
I'd like to own my car at the end of it. There are people who still want to do that.
Yeah.
But I'm not so sure it's the smartest thing to do, depending on what it is that you want for your mobility needs.
Absolutely.
And what your personal circumstances are at that point in time.
It would be amiss if I don't ask this question. Before I ask this question, is there a calculator on the website where I can play around with how much? All right. Yes. Now, once I start playing around with that calculator, it gives me a certain price for 36 months with this certain amount of mileage. Does that mean I'll automatically qualify, or do you guys still look at credit status and all of those things?
We would definitely still look at credit status, customer profile, etc. Because the calculators on the websites are generic.
Yes.
You find them for home loans, you find them for vehicle financing. And of course, it cannot accommodate.
It's just a guide.
It's just a guide to say it would be in this sort of ballpark or range to give you a feeling for what it could be.
Yes.
But you would have to go into a dealership, do an application based on your profile, your credit score, etc. You would then get an offer that's put to you.
Yeah.
Sometimes, if credit scores are not so good, then there'll be conditional approvals where you would need to put down a bigger deposit.
Okay.
Similar to home loans.
Yes.
If your credit score is not good or you are a young entry into the market, the banks usually come back and say, listen, we need a 20%
deposit. We can finance 90 or 80 years.
Exactly.
Okay.
Yeah. So it works on exactly the same basis. But the calculators will just give you a feeling for what sorts of installments you are talking about.
All right. But up until the end of April, we can still walk into an Audi dealership. We can test drive, right? Yes. And get entered into a competition to potentially win an Audi experience at Formula One.
Correct.
All right. Perfect.
Yeah.
Before I let you go, do you have children?
I don't.
You don't have children, nieces and nephews?
Lots of them.
Lots of them.
Yeah.
What is the number one money rule that you teach them? So,
from my experience, my number one rule would be if you've got access to credit and if you want to buy a property, and if you've got access to credit of 2 million rand to buy a townhouse or an apartment or whatever it may be, never spend to your limit.
Yes.
So if you got access to 2 million, look at a property in the short term for 1 million.
Yes.
And know that if you can afford 2 million, then commit to paying those installments into the property, pay it off sooner. Then you've got equity that's already built up. And once you have that platform or foundational element in place, it becomes much easier to build upon that.
Oh.
But I think many people make the mistake of,
Yeah.
I got access to 2 million, 3 million, there's a ceiling.
Yes.
Let me go to the ceiling,
Yes.
buy a house for 3 million. It's a 20-year bond. And you're never going to easily see equity in it unless you're able to contribute more.
But also interest rates change. And then they increase, and then
the-
all of a
the
sudden,
installments go up.
now
Yeah,
you can't
exactly.
breathe. Okay, so we're closing off the show with a quick question. So I think I will describe and you have to identify. You played 30 seconds before, right?
Yes.
Perfect. So you can pick any card. Blue is insurance and retirement. Yellow is general. Green is savings and investments. And red is debt. So pick a card for me to describe.
Let's go general.
General,
It
okay.
exposes me more, but...
No, don't look at it. Don't look
oh,
at it. Give it to me. Give it to me.
Okay.
I'm going to describe. You're going to, ooh, okay. You're going to identify what I'm describing, right? Are you ready?
For the first time, I'm moving in my seat, so I'm a little bit restless.
You need to be good at this, or else this is your surname, okay? We're carrying your surname now, right?
Okay.
Okay, so are you ready?
Perfect.
What is the document that you signed between a tenant and a landlord? The document.
A rental or lease agreement.
Just the last word?
Agreement?
No.
Lease.
Yes, right. What
lease.
is, when you've got different types of asset classes and you have investments, what do we call that whole grouping?
A portfolio.
Yes. When you are choosing a rental property, the return, what do we call the return on rental? We call it a rental?
Yield.
Yes. I can play with you. All right. The last one, what is another word for cheap?
Affordable?
Yay! That was really good. That was really good. Thank you very much for being a sport. Definitely
Cool.
can take Asif to any game. He is ready for you, but we really appreciate your time. Thank you very much for taking us
very
through what is
welcome.
Audi Assured. I think that everybody who's watching right now has a sense of what it is. They know whether or not they are the right profile, and I think that's important because often in South Africa, we always kind of collude with the idea of this thing that is being talked about. If it's not suitable for me, it means it's not a good thing, or it's not a good idea, or it's not the right way to do it. But I think what was very clear was the fact that there is a specific profile, there's a specific way of thinking for somebody who would tap into Audi Assured.
Perfect.
And I like you've kind of challenged me on the ownership thing. I think it's such a big thing, like, ooh, we want to own. There's a line in some rap song that says something about owning your masters. Something like that. But Asif, thank you very much.
Well, thank you for having me.
Awesome,
Much
awesome.
appreciated.
And hopefully we'll see you at one of the Audi dealerships when I come to test drive.
Perfect. We look forward to it.
Awesome. Thank you very much for tuning in. We'll see you guys on the next one right here on the Financial Buddy TV.